Greetings to all grade 12 accounting learners. So in this video, I will show you how to prepare the notes to the cash flow statement. So I will use 2022 common test to explain the preparation of the notes. So this paper was written in the province of Eastern Cape. So let us get started. So question 2.2, we are required to complete the following section for cash generated from operations. Cash effect of changes in working capital. And then we are told that cash outflows must be shown in brackets. So guys, we are required to prepare the section that is found under the cash generated note. So here we are not preparing the entire note, cash generated note, but we are required to show only the section of changes in working capital. So in the answer booklet already, we have been provided with the line items that goes under this section. So we have change in inventory. So change in inventory, we're gonna check the trend. So we'll indicate whether the inventory has increased or decreased, and then also indicate if the balance is the inflow or outflow. We have change in receivables, we're gonna do the same, as well as change in payables. So now guys, these items, inventory, receivables, and payables, all these three items, you're going to find them in the balance sheet. So now we go to our information. So information A is an extract of the income statement, so we don't need this one. So the second one is an extract from the statement of financial position, which is the balance sheet. So now here we're going to search for inventory. So here we are not given inventory, but we have current assets. So now guys, this is what you need to do here. So we're going to show workings here. So we are given current assets, and we know that current assets consist of three accounts. So we are given current assets, and we know that current assets consist of inventory. Number two, account or trade receivables. Trade receivables. And the third one is cash and cash equivalent. Cash and cash equivalent. Okay, so we're going to do the comparatives here. So we're going to do comparative figures. So we've got 2022 and 2021 financial year. So 2022 and 2021 this side. So guys, we have current assets. The total is 1,202,400. So we're going to disclose this balance here, 1,202,400. So the total for current assets. So we said we do not have inventory. So for now, we don't know this one. So we're going to put a question mark. So this is an unknown. And then we have receivables, trade and other receivables. So the balance is 481,800. So this one is 481,800, and then cash equivalent is 6,000. Cash and cash equivalent is 6,000. So guys, now we can solve for the unknown. So the unknown here is inventory balance. So let me highlight. So this one is an unknown. And then we're going to do the same for 2021. So for 2021, we're going to do the same thing. The current assets for 2021 is 906,000. And we do not know this one. And we are given trade receivables for 2021 is 352,500. And then cash and cash equivalent for 2021 is given at 67,800. So it's 67,800. So now guys, we're going to use the calculator to get the balance, inventory balance. So we're going to take 1 million for 2022, 1,202,400. We subtract 481,800, we subtract 6,000, and then we get the total of 714,600. So 714,600. So 714,600 is the inventory balance for 2022. And then for 2021, we're going to take 906 current assets, subtract 352, 500 receivables, and subtract cash and cash equivalent, balance of 67,800. And this gives 485,700. So 485,700 is the 485,700. So this is the inventory balance for 2021. So guys, this is how we do it. So they were trying to trick us by not giving us the the balances for inventory, but now we have calculated those balances. So now we're going to use this balance to indicate whether we have an inflow or outflow. So now inventory. So now let us indicate if we have increase or decrease in the inventory balance. So last year, the inventory balance was sitting at 485,700, and end of current year 2022, the inventory balance is now sitting at 714,600. So now we can see that the inventory has increased from 485,700 to 714,600. So it has increased, and then we're going to find the difference. So we're going to subtract the two figures to get the difference. So if the inventory increases, it means the company acquired more inventory. So it's an outflow because it means the company purchased more inventory. So this one is going to be an outflow of cash. So inventory, change in inventory. So inventory has increased. So increase in inventory, increased by how much? So you take 714,600 subtract 485,700. So let us find the difference. 714,600 minus 485,700. So the difference is 228,900. So guys, it's an outflow. 228,900. Why is it an outflow? Because the company has acquired more inventory. So how do we know that the company has acquired more inventory? Because the inventory balance has increased. We are now having more inventory. So the reason we are having more inventory now is because we have acquired or we have purchased any inventory from the suppliers. So that is why we indicate this as an outflow of cash. And then the next one is trade receivables. So guys, we have trade receivables here, 481 and 352,500. So they are referring us to note number 1. So now note number 1, this notes, trade receivables note consists of net trade debtors, accrued income, and SARS income tax. So guys, if we have SARS income tax balance sitting under this note, it means that we've got a debit balance, SARS debit balance, meaning, so this is a debit balance. So if we've got a debit balance, it means the SARS is owing us. So we have made our provisions are more than the assessed amount by SARS. So we have overpaid to SARS, so therefore SARS is now owing us. So every time you see this balance included under this note, you must know that SARS is owing us, so it's a debit balance. So we know that SARS income tax, we've got 5.4 for 2022 and 2871. So both of these are debit balance, meaning SARS is owing us. We overpaid SARS. And if this balance is sitting under the note of trade and other payables, that would be a credit balance, meaning we are owing SARS. So, but in this case, SARS is owing us because we have made our provisions exceeded the amount that was assessed by SARS. All right. So now, because we're gonna do tax paid note separately, we must take the effects of these balances when we want to indicate whether we have an inflow or outflow of account receivables. So we're gonna exclude these two because we're gonna deal with them separately when we prepare the tax paid note. So now this is what we're gonna do here. We have a total for 2021. We have a total of 481,800. 481,800, and included in this total is the balance of 5.4, which relates to income tax. Because we're going to deal with the tax note separately, we must take out this balance. So we subtract 5.4. So the balance of receivables that has no tax effect is 476,400. So the balance that we're gonna use is 476,400. Same thing we're gonna do for 2021. So the balance is 352,500. Subtract 28,700, which related to income tax. So the balance is 323,800. So the balance here is 323,800. So guys, to determine whether we have increase or decrease in trade receivables, we're going to use the balance that has no tax effect. So because we have removed the tax amount. Why have we done so? Because we're going to do tax paid note separately. So we're going to take this balance into consideration when we prepare the tax paid note. For now, we just ignore these two balances. So now we've got 476,400 and 323,800. So now, is this gonna be an inflow or outflow of cash? So last year we've got 323,800 outstanding balance. So this is the amount that our debtors are owing us last year, and then the balance has increased. So it means they haven't paid us; they didn't pay us. So instead, they came and increased their case. So it means that our debtors, instead of paying us, they took more of our stuff on credit. So this will be seen as an outflow. So we've got an increase in account receivables. Then the difference 476,400 minus 323,800. So 476,400 minus 323,800. So guys, we're gonna record this as an outflow because our debtors never paid us. So 476,400 minus 323,800. So the difference is 152,600. 152,600. And then the last one is trade payables. So do we have trade and other payables? Yes. So we've got the balance for both 2022 and 2021. So for 2022, we've got 432, and then 2021, 814,600. Okay, so we don't need to adjust these two balances. So we're going to use them as they are given in the question. So now, what effects has this caused to our bank balance? So has this increased our bank balance or increase or reduce our bank balance? So last year, that is 2021, or at the beginning of the year, because this one is the end of the previous year, automatically it becomes the beginning of the current year. So at the beginning of the year, we were owing our suppliers, our creditors, a balance of 814,600. And then at the end of the year, we are now owing them 432. So this means we have paid them. So this is an outflow. We were owing more and now we are owing less. So the reason we are now owing less is because we have paid a certain portion of the debt that was outstanding. So there is a decrease here. So account payables has decreased. And then the difference, at the beginning we owed 814,600, and at the end of the period we are owing 432,000. So how much did we pay to our suppliers, to our creditors? So we just punch this in the calculator. 814,600 minus 432,000. So it means we reduce our balance, our debt by 382,600. 382,600. So guys, change in inventory, we've got an outflow of 228,900. Change in receivables, we've got an outflow of 152,600. And change in payables, we've got an outflow of 382,600. So the cash effect of changes in working capital. So now we're gonna take, so the first one is negative 228,900 minus 152,600. All the balances, guys, are negative, minus 382,600. So this gives us negative 764,100, which is an outflow as well. So negative 764,100. So guys, by doing this, you have earned yourself 9 marks. So 9 out of 9. Then the next one. So the next one, that is 2.3. We are required to calculate the following amounts for the cash flow statement. So for 5 marks, we're gonna prepare taxation paid. So that is the tax note, tax paid note. So we're gonna prepare this note here. So guys, when preparing this note, we're gonna have amount due at the beginning. That's the beginning of the year. And then we take amount from the income statement. Then amount due at the end of the period. So amount due at the beginning, amount from income statement, and amount due at the end. So there is a summary that I want to provide you with here. So guys, when we prepare this note, taxation paid note, we check. Sometimes it will, you will be given an opening balance that is positive or negative. So we know that tax balance can be positive or negative. You can have SARS income tax sitting on the debit side, and you can have SARS income tax sitting on the credit side. So if the opening balance is sitting on the debit side, you will that balance will be negative. And then if the opening balance is sitting on the credit side, that one will be positive. So this is the case of opening balances. If the SARS income tax is having a debit balance, you're going to put that balance as a negative balance. But if SARS income tax is sitting on the credit side, you're going to disclose that balance as positive. And then now we are doing the case of closing balance. If the closing balance is sitting on the debit side, you're gonna disclose it as a positive figure. And if the closing balance is sitting on the credit side, that one will be negative. So guys, this summary will help you. So now let us check here the opening balance, SARS income tax opening balance. So guys, we have SARS income tax opening and closing balance. So both balance are on the debit side. Why? Because these balance are disclosed under trade receivables notes. So if you have SARS income tax balance disclosed under this note, that indicates to you, Uti, the SARS income tax balance is the debit balance. So the opening balance is 28, which is the debit balance. So 28,700. So it's got 28,700. So this is the opening balance. So it's a debit balance. So is it gonna be positive or negative? So we said if, so let me put the highlighter here. We said if the opening balance is a debit balance, it is negative. Therefore, we're gonna put this one in brackets. It's negative. So if this was a credit balance, then base over positive, obvious. And then income tax from the income statement, the amount assessed by SARS. So we're gonna find that one. We income statement. So tax. Okay, so we are not given, but we're gonna calculate it. We have net profit before tax and net profit after tax. So now this is what you should do here. You know, when you prepare the income statement, that's the bottom of your statement, you have PPT, line item, profits before tax. And then from profits before tax, you subtract the income tax expense. And then you get profits after tax. So here we've got net profits before tax of 1,660,000, and then the profits after tax is given. It's 1,162,000. So guys, the difference between these two balance, so the difference between this balance and that balance will be your income tax expense. So now let us punch the calculator. 1,660,000 minus 1,162,000. So the difference is 498. 498,000. So the income tax expense as per the income statement is 498. So this is the balance from the income statement. So 498,000. And then SARS income tax closing balance. So SARS income tax closing balance. So the closing balance is this one. SARS income tax 5.4 is still a debit balance. So 5.4. So is it positive or negative? So it's a closing balance. So we said if the closing balance, if SARS income tax closing balance is sitting on the debit side, it's positive. So you write it or you disclose it as a positive balance. So now to get tax paid, you just punch this in your calculator. So we've got negative 28,700, positive 498,000, positive 54,000. So the amount is 474,700. So the answer, you disclose it on this side. So here you show workings, and then on this column you only show the final answer. So the answer here is 474,700. So this is the balance that the company paid to SARS, and this is an outflow, guys. You put it in brackets. So this is an outflow because we are making a payment. So by doing this, you get 5 out of 5. And then the next one, proceeds from sale of fixed assets. So the formula to get proceeds from sale of fixed assets, you take the carrying value at the end. You take the carrying value at the end, you add depreciation. So please make sure that you take down the formulas. So you add the depreciation, you subtract a fixed asset purchased during the year, and again you subtract the carrying value of fixed assets at the beginning. So guys, this is the carrying value of fixed assets, and this one is the carrying value of fixed assets at the beginning. So the first one is the carrying value of fixed assets at the end, and the last one is the carrying value of fixed assets at the beginning. Okay, so now we're gonna check if these balance are given. So fixed assets carrying value, so it's given. The one at the end is 11 million for 34,000. So at the end, carrying value at the end is given at 11,434,000. And then fixed assets at the beginning is given at 9,984,400. 9,984,400. So this one we put it in bracket because we separate it. Then we have depreciation. So depreciation should be given in the income statement extract. So depreciation is given at 280,800. So in this case, we're gonna add depreciation 280,800. So do we have fixed assets purchased during the year? So we're gonna check that. So additional information C talks about fixed assets. So let us read here. The total cost for the acquisition of new vehicles and extension to the buildings during the year amounted to 1,632,000. So during the year, equipment was sold at carrying value. Okay, so this is the total cost for the acquisition, for the purchase of new vehicle and extension to the buildings. So the total cost amounted to 1,632,000. So these are additions. So we subtract 1,632,000. So the company purchased the new vehicle and extended the building. So the total cost amounted to 1,632,000. So now when you punch the calculator here, you will get the proceeds from sale of fixed assets. So we've got 11,434,000 plus 280,800 minus 1,632,000 minus 9,984,400. So this gives a balance of 98,400. 98,400. So here we are told that during the year, equipment was sold at a carrying value. So we sold an equipment, and by selling this equipment, we received how much? We received 98,400. So this is an inflow because we sold an asset, and then when we sell an asset, we receive cash. So this one is an inflow. So guys, by doing this, you have earned yourself 5 marks. Next one. So this is the last one, I believe. Okay, so we have dealt with this one. Okay, so this is not the last one. There is still 2.4. Okay, here 2.3.3. Funds used for the repurchase of shares. 2 marks. So they want us to determine the amount that was used for the repurchase of shares. So we're going to need to read information concerning share repurchase. Okay, so information D. Additional shares were issued on the 1st of May 2021. And on 30 April 2022, shares were repurchased. Okay, so 30 April is the repurchase date. The value of the shares as per the average issue price amounted to 25,000. The asking price was 10% more than the average price. So guys, the asking price is the repurchase price. So here we are given the average price. So we are given the average issue price. Average price. So the total is 25,000. So average price 25,000, which is the total. And then the repurchase price. So the repurchase price is not given. So we're going to put a question mark. But what we know is that the asking price, which is the repurchase price, was 10% more than the average price. So now already we have the formula. So now if we want to get the repurchase price or asking price, so to get the repurchase price, we're going to take the average price plus 10% of average price. So guys, here we are told that the asking price was 10% more than the average issue price. So the average okay, so on top of the average issue price, we're gonna add the 10% of that average price. So that's how we're gonna get the okay. So let me just copy and paste, because already this is part of our workings. So I will copy and paste it here. So we must show workings here. So to get repurchase price, we're gonna take the average price, the one that is given of 25,000, plus 10% of the very same price, average price. So 5,000 plus 10% of 25,000 is 2.5. So 25,000 plus 2.5, this will give us 27,500. So we're gonna write the answer on this side. 27,500. Guys, this is an outflow, because when the company buys back shares, the bank balance is reduced, so it's an outflow of cash. So guys, this is for 2 marks. Or there is another formula that you can use here. If you don't understand this one, you can take, okay, so purchase price is equals to 25,000 times. So guys, we are told that the repurchase price is 10% more than the average price. So from 100, you add the 10, you will get 110. So you simply multiply by 110%. So still this will give you 27. So let me check. 500. So 25 times 110%. So this still gives 27,500. So it's up to you which method you understand better. And then the last one. So this is the last part of this question. So 2.4. Complete the following section of the cash flow statement. So net change in cash and cash equivalent for 4 marks. So they want us to complete this section. So this section, net change in cash and cash equivalent. So the opening balance, so you're gonna disclose the opening balance and the closing balance, cash and cash equivalent, opening and closing balance. So the opening balance, cash and cash equivalent, we've got 67,800, and then there is no overdraft. So we're gonna take this as it is, 67,800. So let me erase everything. I want to show the amount that I'm highlighting. So we are dealing with cash and cash equivalent and the overdraft. And guys, this one, cash and cash equivalent is positive, and an overdraft is a liability, so it is negative. So cash and cash is an asset, that is why it's positive. And then cash and and bank overdraft is a liability, so it is negative. So at the beginning, that is 2021, we have cash and cash equivalent 67,800, and there is no overdraft. So it is positive 67,800. And then for 2022, cash and cash equivalent balance is 6,000, and the overdraft is 264,000. So now we're going to do the set off here. So how do we set off? So I will show workings. So we've got an overdraft. Remember, overdraft is a negative balance. So we've got an overdraft of 264,000, and cash equivalent is a positive balance, that one, of 6,000. So when you punch these two in the calculator, negative 264,000 plus 6,000. So this gives us negative 258. So we put this in brackets. 58,000. So this is negative. And then now we want to get the balance, which is the net change in cash and cash equivalent. So how do we get that balance? So now pay attention. So we're gonna work backward. We are working backwards, guys. And when we work backward, we're gonna change the signs. So we've got negative 258,000. So since we are working backward, this one is positive. So because we are working backward, we're gonna make it negative 67,800. So the balance that you should have here is negative 325,800. Negative 325,800. Then we are done. You have your 4 marks. So guys, I hope you understood these notes. So please make sure that you practice. If you do that, you will be okay in your June exam. Thank you and goodbye.